Resuming the same question, the last entry was on 31st March, profit and loss appropriation account debited 4,25,000 to A's capital account to B's capital account. Remember, since there was no partnership agreement, so profit is divided in equal ratio. Second part is partner's capital account. So it is you have to draw total 8 columns. On debit and credit side, date particulars, partner's name A and B, date particulars A and B. So the first entry is balance brought down in the left side, right? 2017, you have to write the date, year. On 1st April, balance brought down. This balance brought down is nothing but what capital is being brought, which is 5 lakh and 3 lakh. Then 5 lakh and 3 lakh. Then second, on 2018 year, March 31st, by profit and loss appropriation account. So the profit which is given here will be transferred in the credit side, 2,12,500 and 2,12,500. Then on 31st March, the closing balance to balance carried down, we will add up 5 lakh plus 2,12,500, that gives you 7,12,500 for A's, and for B's 3 lakh plus 2,12,500, that means 5,12,500, which is transferred as a balance carried down under B side. Now the third part is preparing loan account, A's loan account. So here again you have to maintain two sides, debit and credit, date particulars amount and date particulars amount. Then year 2017, year which is 2017, right? And the loan is provided on 31st October. So the date 31st October, by bank 2 lakh, and by interest which is 5,000 already calculated in the working note. So when you add up 2 lakh plus 5,000, that means balance carried down is 2 lakh 5,000 in the left side, March 31st. So this is the completion of this question. First we have looked into the working note, how to calculate, how we have calculated A's loan amount, right, for the 5 months 6%. Then net profit 4,30,000 minus 5,000, that gives a 4,25,000. Then this 4,25,000 has been divided equally to be given to A and B. After that we have gone through the journal entries, then partner's capital accounts and A's account. This was the first condition when partner give loan to the firm. Now have a look into the second conditions, where interest on loan taken by a partner from the firm. Here partner has taken loan from the firm. In that case, in the top I have written the entries, what entries to be passed for charging interest on loan. So partner's capital or current account debited to interest on partner's loan account, and for closing the interest on partner's loan account, interest on partner's loan account debited to P&L account. So here remember, you do not have to maintain any loan account. Directly partner's capital account, the amount will be entered in the partner's capital or current account. Now let's look into the question. A and B are partners showing profit in the ratio 3:2. On 1st April 2018, their capital were 5 lakhs and 3 lakh. That means on 1st April 2018, A has brought 5 lakh and B has brought 3 lakh. A took a loan from the firm of 1 lakh rupees on July 1st, 2018 at the rate of 12% per annum. Profits on 31st March 2019 was 1,50,000 before interest on loan. Past journal entries. So remember here, first thing first, we will calculate the interest amount. So let's see the working note. Working note, already it is mentioned, the amount of loan is 1 lakh and the rate of interest is 12%, and it is given on 1st July. Then July to March, July, August, September, October, November, December, January, February, March. So this way we have got 9 months. Remember, for the months calculation, the date when the amount is lent to the end of the year, between those total months is the month. Okay, so here 1 lakh into 12% into 9 months. So this way the interest on loan is 9,000, as you can see in the working note, and net profit is 1,50,000. So 1,50,000 plus 9,000, 1,59,000. So here I would like to point out a major difference in the two questions. The first condition says when partner give loans to the firm, that time that interest on loan is a charge against profit, that is a loss that the firm has to pay. But in the second case, when partner has taken loan from the firm, here the interest on loan is a gain, is a profit for the firm. Therefore in the profit, this interest on loan is added. So our total divisible profit is 1,59,000. In the question, ratio is mentioned 3:2. So divisible profit of 1,59,000 into 3 upon 3 plus 2, and for B 1,59,000 into 2 upon 2 plus 3. The A's divisible profit is 95,400 and B's divisible profit is 63,600. Now let's look into the journal entries. The journal entries on 2019 31st March. A's capital account debited to interest on A's loan account. Why? Because A has taken the loan from the firm. So A's capital debited to interest on A's loan amount. The interest is 9,000 already we have calculated, and on 31st March for closing that interest on loan amount, interest on A's loan which is 9,000 to profit and loss account. Here profit and loss credited, reason it is a credit, it is gain. This interest on loan is a gain, therefore profit and loss is credited. But in the earlier question, profit and loss was debited, right? Profit and loss was debited. The reason it was a loss, it was a charge against profit. This is the major difference between when partner gives loan to the firm and when partner takes loan from the firm. The second condition, where partner took loan from the firm. Then partners capital account, debit credit, date particulars A and B, date particulars A and B. So first entry is by balance, the opening balance by balance brought down, which is 5 lakhs and 2 lakh, 3 lakhs, sorry, as mentioned in the question. Then second entry by profit and loss appropriation account, which we have already calculated, 95,400 and 63,600. That amount is transferred in the credit side. Then interest on loan account, which is shown in the debit side, 9,000. So credit side of A 5 lakh plus 95,400 minus debit side of 9,000. So the balancing figure is 5 lakh 86,400. In the same manner for B, 3 lakh plus 63,600 minus nothing is given in the debit side, so the entire amount will be transferred as a balance carried down. So this is the question. This is the major difference between these two cases. Under case 2, you do not have to open a loan account, you directly enter into the capital account, which was not in the first case. And in the second case, this interest on loan is added in the profit. The reason it is a profit or gain for the firm.